Hi, in this video, we are going to do the cash analysis, and the example I'm using is Oracle Corporation. Okay, so the first thing I need to do is find out what is my year-over-year variance in cash. So I am on my balance sheet variance analysis, so I can see my cash balance. My variance is negative 1106. Now this is in millions, so that's cash means cash decreased, basically $1.1 billion. All right, so that's the number I'm looking for. And so now I'm going to go to the statement of cash flows. And if I go down to my net increase or decrease in cash, I see that that number ties out. There are a couple situations where it's not going to tie out. And in the examples that you guys are working with, there's two companies where the cash isn't going to tie out because there is some restricted cash. And I think it's Merck and Match Group. So if you're in either of those, your cash isn't going to tie out. You're changing cash to this line on your statement of cash flows. But for all the other companies, it will. It's a good idea to check that. And if there's no restricted cash, then it should tie out. Okay, so now I'm going to start with listing out my increases and decreases. So I'm going to start with my cash flow provided by operating activities, okay? And you don't have to explain this, we just have to list it. So I'm just going to go right here and I'm going to say operating, and let's make this a little wider. And let's make this a little wider. And I'm just going to put this number, cash provided from operating activities, in this column. Now, when we're doing the year-over-year analysis in cash, we only need to look at the 2019 because this is telling us what happened between May 31st, 2018 and May 31st, 2019. So these two columns will be irrelevant for our analysis. We're only looking at the current year. Okay, so I've got my operating total, so that's good. Now I'm going to go and look in my investing activities. The first thing I have is marketable securities, and I actually have three different totals for marketable securities. Some are proceeds, some are proceeds for maturities, some are purchases. And this makes sense, right? Because marketable securities, we're always buying and selling them as we have excess cash or as we need cash. So I'm going to net those together. So if I highlight these three numbers, it tells me the sum down here, which is an increase of 28,580. But so I'm going to just put this and net proceeds from marketable securities. Okay. And I'm going to just actually add them together to make sure that I have the right amount. So I'm going to add my three numbers related to marketable securities. And I see that net proceeds of 28,580. Okay. So I've done these, and you know what I'm going to go ahead and do is I'm just going to, how do I add color here? Text color, fill color. I'm just going to mark those so I know what I've already included. Okay. The next big number, I'm going to skip over this acquisitions number just because it's little, and I'm just trying to get the big stuff explained, right? I'm not trying to explain every single in and out of cash, just the big stuff. So I'm going to skip the littler numbers right now, see if that gets me close enough. Okay, so capital expenditures, which I can put as capital expenditures. These are just purchases of fixed assets. So if I wanted to, I could write purchases of fixed assets, and that would be perfectly acceptable. But I'll go ahead and use what Oracle used. And we're just going to say that we're done with that one. Okay, so that's all of our big investing activities. Now we're going to go to our financing activities. And we've got repurchasing of common stock. And that is going to be negative 36 million. Remember, this is in, or billion. This is in millions. Let me actually make sure. Yep, we're still in millions. So this is going to be 38 billion, or 36 billion, sorry. My bad. Okay. Do people still say that? My bad. I don't know if that's like an old person thing to say now, but you know, either way. All right. And then issuance of stock, of common stock, with that number. And what else do we have here? I'm going to skip the 503 for right now. Dividends. We paid some cash dividends. The shareholder of Oracle, I received some cash dividends, which was nice. And then we have here repayment of borrowings. We basically paid on a loan. Borrowings and $4.5 billion. Okay, so that's my big stuff. So I'm going to go ahead and add these up now. And it comes out to 54. And I'm actually looking for, what did we say? Negative 1.1 billion, which means that I'm going to have to include some of this little crap. Okay, that's a bummer. So here we go. We'll just put acquisitions. Would have been nice if I didn't have to include this, but sometimes that's not how your luck goes. And shares repurchased for tax withholdings. All right, these are repurchases of stock. Even though the reason is different, it's basically repurchases of stock, which is what we had up here. So I'm just going to add it in up here. If you want to list it separately, that's fine. Okay, so we added repurchases. I'm just trying to keep this not too junked up. 449, and then the other thing we will add is, oh, this is just other, and then the effect of exchange rates. No, I guess we'll include that. Effect of exchange rate, and we'll include that. And that just means that we were keeping cash in different currency. So we're reporting in US dollar, but if we hold a bunch of euros and the exchange rate changes, that means that, you know, maybe it used to be that, 80 or 800,000 euros was $1 million. Now, maybe with the change in exchange rate, 800,000 euros is only $900,000. So that's going to change it in dollars. All right, so now let's do some adding. All right, it gets us to a negative 970, which is pretty close to negative 1106. So we're going to go ahead and call that good enough. All right, so now I have my reconciliation. I know what the big ins and outs are. And so I'm going to copy this, and I'm going to go to my cash analysis for Oracle. Okay, so I'm going to call this Oracle Cash Analysis. And I'm going to just copy this in here. Link to spreadsheet. We'll go ahead and link it. That's fine. Okay. So all of my analysis, I am going to start the same way, and I'm going to say cash decreased 1.1 billion. Because remember, it was 1106. 1.1 billion, and I'm going to go back to this and get that percentage because I need that 5%. Okay. And so I'm going to go back and 5%. So that's how I'm going to start. And then I'm going to say primarily due to, because again, we didn't capture every single in and out. So we can't, we're going to say primarily due to, and that word primarily lets people know like we're catching the big stuff. This isn't everything. Okay. We kind of want to let folks know that this isn't an exact reconciliation. All right. So primarily due to, and I decreased. So I'm going to start with listing my decreases, and I'm going to start with the biggest one. So I'm going to write the repurchase of common stock for $36.6 billion with a B. And then the next biggest one is this one. So repayment of borrowings of 4.5 billion. That's this one right here. Then I'm going to go to the next biggest one, which is our payment of dividends for 2.9 billion. Payment of dividends of 2.9 billion. And, oh, no, I got more than and. Capital expenditures of, call that 1.7. I'm just going to round up billion. And then we have acquisitions for, doesn't really matter. I'm just going to call this 400 million. And the effect of exchange rate fluctuation of, let's call this 200 million. Okay, so that's all my decreases. Because I'm explaining a decrease up here, I'm listing my decreases first. If my overall cash had increased, I would explain my increases first, but it decreased, so that's all my decreases. Okay, then I'm going to say partially offset by, right? Because if you add up all of these decreases, you're going to go, wow, that's way more than 1.1 billion. That doesn't make sense. So now I have to list the increases. And between those two, I'm going to say that here's all my decreases, and my decreases were partially offset by, and then I'll list my increases. So net proceeds from marketable securities, and net just means I've taken everything we paid and everything we got, and I've added them together. Securities of 28.6 billion. Operating cash flow of 14.5 billion. Issuance of stock of 2.2 billion. 2.2 billion. And that's all of my increases. So I'll just put a little and here. Okay, so that is going to explain it. And this is basically my cash analysis. Now, when you turn this in, I don't necessarily need this part, the reconciliation you did. But if you want to include it down at the bottom, just so I can see where you got your numbers, that's totally fine. But what I want is this nice write-up, okay? So if someone says, hey, what happened with cash at Oracle? You can read, it's always going to start, cash decreased by 1.1 billion and 5%, primarily due to the repurchase of common stock for 36.6 billion, repayment of borrowings of 4.5 billion, payment of dividends of 2.9 billion, capital expenditures of 1.7 billion, acquisitions of 400 million, and the effect of exchange rate fluctuation of 200 million. Partially offset by net proceeds from marketable securities. Again, these are our increases now of 28.6 billion, operating cash flow of 14.5 billion, and issuance of stock of 2.2 billion. All right, so I've explained what happened to Oracle Cash. I told you what it increased or what it decreased by and the percent, and then I went and told you the big things that contributed to it. Okay, so that's our first example. I'm going to do a second example just so you can see it for a couple different companies, but this is pretty much what I'm expecting you to do. So if you're looking at this and you're saying this is pretty straightforward, you can go ahead and try it with your own company. If you're looking at this and you're like, wow, not getting it, be sure to come see me at office hours, send me a Canvas mail, or post something on the Q&A forum and we'll get it sorted out. Okay, but this is it. So really what you're going to turn in is just a single paragraph. All right, sounds good. See you at the next one.